It started 18 months ago with 2 consecutive negative quarters for real GDP growth at an annualized rate. And since then, one sector after another has stumbled. So housing, for example. Housing, by many metrics, is down 40 to 50% on a year-over-year basis. That is a recession. In fact, it's worse than a recession. We've gone back to COVID lows. We're not far from 08-09 lows. And remember, the housing crisis is what started that global.
Is the global financial system on the brink of a major transformation? Cathie Wood, the CEO of ARK Invest, believes that cryptocurrencies will play a leading role in reshaping the global financial system. In a recent interview, Wood predicted that crypto will eventually become the dominant monetary system in the world. But what are the implications of this prediction for investors and consumers? In this video, we'll take a closer look at Wood's prediction and explore the potential impact of crypto on the global financial system. We'll also discuss Wood's thoughts on the current state of the economy and the outlook for inflation. So if you're interested in learning more about the future of money and the potential impact of crypto on the global financial system, be sure to watch this video. Subscribe to our channel today for the latest crypto predictions from the world's leading experts.
I don't think economists and investors spend enough time understanding what is happening in the rest of the world. And we think the rest of the world is experiencing much more pain than we are. Certainly China, increasingly Europe, and of course they influence the rest of the world. So we might be in a rolling recession and we think they are in something worse. Now, economic disconnects. I've mentioned one of them before, this difference between gross domestic product, so real GDP growth, and real GDI growth, or gross domestic income growth. They should be the same. GDI equals GDP, and yet they're not. In the last year, the GDP growth rate has been, in real terms, 2.4% on a year-over-year basis, which is okay. It's fine. It's not a boom, but it's steady as she goes. GDI, on the other hand, is up 0.2%. It had been down. It's up 0.2%. Essentially, no real growth, and corroborating this view of a rolling recession. We tend to believe GDI more. GDP is revised more because it's much more complicated to calculate it. You've got consumption, all the areas of consumption and investment and government spending and trade and inventories. Lots to measure there, whereas on the GDI front, we're measuring income, and we get those metrics from tax authorities and others. So much easier to measure. So we would lean towards GDI, which says this economy's very sluggish at best. Rolling recession seems right. The employment report was a big upside surprise after months of downward revisions, and this month was an upward revision to some of the prior months. So the upside surprise, I think, was 337,000, around that, versus nearly double the expectation. So that's interesting, but here again, we have something for everyone. The household employment survey, as opposed to the non-farm payroll survey, suggested that employment growth was only 86,000. Now that tends to capture more small businesses. And so at the margin, perhaps small businesses are fraying. We did see in the ADP report this week that large businesses continue to lay people off, and the challenger layoff rate also is up more than 50% year over year. So again, lots of cross currents. Something for a trick out there that the private sector measures. It's called trueflation, and it measures millions of goods and services constantly, and it is at about 2.5%. So that's interesting. It's the oil price going up has weighed on the stock market, but why not on consumer inflation psychology? It's because gasoline prices are starting to come down, and refiners are probably getting hit. We'll go into that in the charts. Also on the inflation front, you've been hearing about Tesla's price cuts. Well, it just cut the Model Y price. That year-over-year increase peaked at 6%, ironically, in March of 22, when oil prices shot up as Russia invaded Ukraine. Oil prices shot up as Russia invaded Ukraine.
Presents a different narrative, one of an economy that's sluggish at best. What's concerning is the discrepancy between the Household Employment Survey and the Non-Farm Payroll Survey. These numbers hint at a possible strain on smaller businesses. So, while some indicators show promise, others show a potential economic strain. A closer look at the employment scenario reveals an increasing duration of unemployment, a metric we cannot ignore. As always, the devil is in the details.
On the inflation front, we have some disconnect. The oil price, that tends to influence inflation psychology. And yet, in the University of Michigan report, inflation expectations came down quite a bit. On a year-over-year basis, the CPI now is 3.7%. There's another metric out there that the private sector measures. It's called trueflation, and it measures millions of goods and services constantly, and it is at about 2.5%. So that's interesting. It's the oil price going up has weighed on the stock market, but why not on consumer inflation psychology? It's because gasoline prices are starting to come down, and refiners are probably getting hit. We'll go into that in the charts. Also on the inflation front, you've been hearing about Tesla's price cuts. Well, it just cut the Model Y price again, a very popular car. And the Model Y, on a year-over-year basis, the price of it is down 27%. And now that's important because it's becoming more competitive than a lot of gas-powered vehicles out there. And on top of that price decline, consumers can get subsidies. And some of the subsidies, depending on the state, are quite large. So this is very tough for traditional autos, and my guess is you're going to see an unraveling of auto prices. The average hourly earnings index employment report was up 4.2% on a year-over-year basis and 0.2% month to month, so that's annualizing at roughly 2.5%. That year-over-year increase peaked at 6%. Ironically, in March of 22, when oil prices shot up as Russia invaded Ukraine.
In this video, we've taken a closer look at the economic landscape and the outlook for crypto. We've also discussed Cathie Wood's prediction that crypto will eventually become the dominant monetary system in the world. While Wood's prediction is bold and controversial, she has a track record of making accurate predictions about disruptive technologies. And with the global financial system facing a number of challenges, it's possible that crypto could play a major role in reshaping the way we think about money and finance. Subscribe to our channel for more videos on crypto and the future of money.